Check this out.
The correlation
between the Bitcoin and Ethereum dropping with the stock market?
Yes.
That there is no such thing as decentralization. They use the people to believe in that lie, and all the major hedge funds own the majority shares of all crypto. That's the correlation. Any competitive advantage that a person truly has, like, you notice Buffett never tells you when he's going to buy, like Chevron. He took a big oil position, right? The people who are truly winning, they're not going to tell you. And as much as I love a couple of people that are waving a Bitcoin flag, they're doing it because they're heavily invested in it. And they're using the we the people thing against the machine while they work for the machine. I've always said this, the correlation between crypto, if we scream about it too much, they're going to come take it over. And they did.
First of all, I want to say shout out to Earn Your Leisure, Ian Dunlap, the master investor. He is a genius trader. You can tell I've never taken his course or been a part of his services, but I can tell by all of the responses and the consistency of folks that talk about the money that he's made them. This guy knows what he's talking about. He knows what he's doing. So shout out to those guys. I wanted to add, the reason why I was doing this video is because I want to add context. This is important. I want to do this as quickly as possible. I want to add context to what Ian Dunlap just talked about, because sometimes Ian doesn't have the time to go into, or there are certain things that he can't say because of his position, and he can't explain or break down sometimes what he's saying. So I want to help some folks because I think that there are some implications based on what he said that I don't want people to walk away with, or I don't want people to walk away without having enough information while they go do their own research. So really quickly, let's just go over a couple things. I want to touch on 4 things, and this is going to be a clip cut up, and the full version will be on YouTube. You can check it out there. All right, number 1, correlation, right? So for those that don't know what correlation is, that means that when Bitcoin and Ethereum, or when crypto, or I should say when the stock market goes up and down, that's when crypto is going up and down at the same time at this point. Both markets or both sectors, asset classes are doing the same behaviors at the same time. That's what they mean by correlation. They want to know, or people are saying, why are those two asset classes moving at the same time? All right. And Ian Dunlap's response was there was no such thing as decentralization. And I knew what he meant by what he said, but let me break down and give some context to what he said so that we can understand it with a little more clarity of what that means. First of all, decentralization. Decentralization, and you have to know the dichotomy between decentralization and market manipulation. Decentralization is not really about the correlation of the two asset classes of stocks and crypto. Decentralization is more about the fact that there is a software that is created with Bitcoin and in the algorithm on the blockchain that is not ran by any human beings, right? Centralization in this context is about humans running the system, all right? Humans running the system. And when we say running the system, the ability to print more money or print more of the assets. So in other words, the bank or the central bank, the Federal Reserve, is able to print more money whenever they feel like it, right? It's a centralized process in terms of being able to add to the money supply or subtract from the money supply. That is a centralized, or the context of the centralized system in which people are talking about when they say the difference between decentralization in crypto, or in Bitcoin specifically, and centralization in the legacy or the traditional system. Really quickly. So that being said, in this context, the person asks, what's going on with the correlation of the two asset classes, that being crypto, Bitcoin, Ethereum, as well as the stock market. And he says there's no such thing as this decentralization, which in a certain context can be true, but in the context and within the context of what decentralization is really about, really what he means, or really what's being said here, is that market manipulation, decentralization does not solve market manipulation. Every market has to deal with the dynamic of market manipulation. And what that means is, and the hedge funds are the biggest players as it pertains, or as it relates to market manipulation, because of the size of the shares and or the assets that they can purchase all at one time. And hedge funds on a regular basis, they are looking to make money each year. So they are traders, they are not long-term investors, right? So that being said, the retail investors are at the mercy of the bigger fish, which is the whale, what they call the whale, of the bigger fish in the market, which is usually the hedge funds. So that's what he means when he says that decentralization is not real. decentralization is actually real when we talk about the protocol, the white paper, the software that is running the actual protocol on the blockchain. Okay, so there is no human being behind Bitcoin that can add or take away from the Bitcoins that are being created. Now, there is a process that I can't go into in this of the miners. And yes, if the miners stop mining, yes, then there will be a problem with continuing to create Bitcoins. But as long as right now they are incentivized, they are making lots of money, they are incentivized to continue to create more Bitcoins. Therefore, but once the mathematical algorithm gets to the point where there are 21 million Bitcoin, according to the protocol and according to the white paper, there will be no more Bitcoin made. That is the difference between centralization, which is the Federal Reserve in America and all of the central banks around the world, and decentralization. It simply means humans can't create more of the asset, or in the case of the central banks, money. In the case of Bitcoin, the coins that are being made, the Bitcoins that are being made. Major distinction. And he talks about the hedge funds owning most of the assets. Again, I just talked about that, but just so it's clear, that hedge funds they do not own the Bitcoin protocol. They do not, just to clarify, Ian didn't say that they did, but I just want to clarify this because of the short snippet in which it was posted by Ian, and his words are so powerful in our community. I want to make sure that we have this, that we have the distinction of what he means and how to break down the differences of these different terms and these different, but hedge funds, they do not own Bitcoin. They do not own Ethereum, but they own a lot of the coins, shares, if you will, within the actual asset class. Okay, which means that when they buy and sell, we are dealing with the trickle down effect of them buying and selling. But this is why crypto is a long-term investment, not really a trade. All right, even though you can trade and people are making money, but if you have to know what you're doing. All right. He also talked about that there are people that are championing or are promoting Bitcoin because they are heavily invested in it. Well, the truth is, all public investors, leaders in the investment space, all of them promote the assets that they are invested in. That doesn't make Bitcoiners or Bitcoin investors unique, or the leaders in the Bitcoin investment unique to anybody else. Elon Musk is most of his portfolio was in Tesla. We are not surprised by that. What does he promote more than anything? Tesla, right? The same thing happened with Bill Gates. Bill Gates, most of his net worth when he started out in the 1980s with Microsoft was in Microsoft, right? Why? Because it was his company. He's promoting what he's heavily invested in. Same thing with Jeff Bezos. Jeff Bezos, his biggest allocation in his investment was in Amazon when he started, and he would promote Amazon, right? So we have to understand that all leadership investors are going to promote what they believe in. That is not just true about Bitcoin or crypto. So I just want to make that distinction. Not to say that Ian was saying that what I just said wasn't true. I just wanted to give context to what he said so that we can understand a little better the comments that he's making. All right. That being said, it's important that we understand the generational implications of crypto. Crypto should not be correlated with present successful companies that are in place, such as Apple, such as Microsoft, such as Amazon. Crypto should not at any point be compared to those companies. Crypto should be compared to technological revolutions and breakthroughs, such as the internet. Crypto is not just a company. Crypto is a brand new technology. It sits on a new technology called blockchain. The blockchain's first utility comes from crypto, which means that crypto, the same way that Amazon sits on top of the internet, we would not have Amazon if the internet did not exist. It's the same thing. So we have to understand and respect the dynamics of how crypto works, what it should be correlated or compared to. And yes, understand that in the short term, it will be correlated with the stock market. But Bitcoin specifically, as long as the protocol stays true to the 21 million Bitcoins, will eventually decouple from the stock market. And the reason why we know that is because unlike the stock market, there will be no Bitcoin splits according to the protocol. There will be no human beings making more Bitcoin after the 21 million Bitcoins are created according to the protocol. If for some reason that does happen, then we know that the protocol didn't work. But as of today, Bitcoin has never been hacked. It has stuck to its protocol. It has been the most powerful technology and economic service to the world to this day. It's not, while it is amazing to be able to benefit in the long term from the money that is being made, and Bitcoin has already made over 100,000 millionaires in its first 10 years. And I believe that it will make many more in the next 10 years. Just one of the many assets that are within the asset class. I do want you to know, do your research, be encouraged, make sure you understand where you are. You do not want to put all your money in any asset class or any asset for that matter. You want to be properly diversified based on what is happening with your portfolio, with your circumstances, with your family. And most important, you want to have a business and you want to make sure you have insurance. Those things are important first before you invest into these other things. All right. I love each and every one of you. Shout out to Ian and shout out to EYL. My name is Felip, and I hope you got something out of this. Peace.